I didn't even grab
Life,
some water.
you should. Is your voice gonna survive it?
Yeah, I think we're all good. I think we're all good. Guys. Guys. Do we actually need to say anything? Like, do we need to go over the trade or not? Because I remember me personally saying it is still valid. Yo!
Showtime!
Get the energy going, man! You guys know this song. You guys know this song. Little introduction song whenever we have victory laps. I'm gonna grab some water while you guys listen. Tell me how you doing, but I really could not give a fuck. Overheating in this bitch, I'm cool enough. I jump in water, niggas acting all so funny. Now I'm pumping on their daughters. You can follow in my steps, but you ain't never going farther. And I'm killing all you niggas like I'm Dexter in the harbor.
Hype in the chat, guys. Study the precision of this guy.
When it comes to picking teams, you know that I'm a star. Dropping buckets on your head. Got a box to check.
Little dance?
Cause I want that patek. Had to leave that bitch already cause she was on my neck. Hit her with the money spent and told her keep the rest. I'm like Johnny with these whips cause I put him to the test. Dripping like I'm soaked, yeah, you know that was some dressed. Hit it from the back, then I nutted on her breast. Stuck into the recipe, I'm feeling like I'm blessed. Feeling like I'm blessed. Feeling like I'm blessed, guys. Saying Wyckoff. Oh, Magana saying Wyckoff Insider rapping.
Soon. I'm fixing a cam. Soon I can do it on as well. Then I will be dancing.
When you guys hear this song, you know we won. Put him to the test. Dripping like I'm soaked, yeah, you know that was dressed. Hit it from the back, then I nutted on her breast. Stuck into the recipe, I'm feeling. Sticking to the recipe, you hear that, guys? Sticking to the recipe. That's all we do. We just stick to the recipe. And not that. Oh.
Is this music already on Spotify?
No, it's not actually. It's from my friend. He just made it as just like a side job. But yeah,
Clean.
Mr. Sergio in the chat himself saying the market makers, guys, don't tell the rest. Don't tell the rest, okay? All I'm saying is that, not gonna lie, okay? Not gonna lie. The manipulation part, it was a trickier one. You know, it was most certainly a trickier one. Because right here, right? Looking at this manipulation play up close. Right here, looking at the manipulation play up close, initially, what I was focused on is I was focused on this distribution right here. So we came up and I actually had this as my model 1 distribution. Okay, that was my initial distribution that I was looking to short down all the way to right here. I was looking to short that down all the way to that PO3 target. And then when this was coming down, I realized, hey, it's also actually possible on on the same time frame to have this as your model 1 distribution, where you have the 3 drives up right here, and these 2 taps on the 30-minute time frame are not 2 taps because you don't have the valid 6 candle rule in between the taps, therefore not calling those 2 valid deviations on the 30-minute. They were on the 15, not on the 30, because you don't have the 2 consecutive candles going up right here. So I saw this and I was like, oh wait, this could also actually be a model 1 distribution like this. However, from a trading perspective, I liked it way more like this, more locally, because the return to zone here was way better than, the return to zone started from this point and not from this point. That's why that was basically my preferred range to use. And then, I was short from that distribution, posted about it in the server, and my take profit got front ran by like 5 cents, or no, like $0.5, like 50 cents. Literally my TP just didn't get filled here. But this is supposed to be a risk-free trade. Like at the bottom right here, you take a TP to kind of equal out your stop loss. But either way, the way that we came down pretty slow, leaving some liquidity above right here. So at the same time, you can also, if you enter, kind of in this area, you don't want price coming back above that point. Like why would it come back above that point and then again dump down after it already hit the target, kind of creating demand along the way right here? So it's like at that point in time, you control your stop loss, you can de-risk the position. There is always the opportunity that I was looking at where this turns into a higher time frame distribution, where kind of like your model 1 was flowing over in a model 2 because you still had some supply up here. Okay, so that was actually what I was watching for on Sunday when we took the Bitcoin long. I was like, maybe we can take a long into a short where this ends up being like a, let me make that, this ends up being a right here, this ends up being a model 1 distribution that goes over in the model 2. So that was the second idea, because the first idea was done here, okay? And then we kind of had like a V-shaped recovery, leaving demand behind. So there was nothing but liquidity here. So personally, right, what I thought was, that the moment I was short right here, we SFP'd this, broke it back to bullish right there, create demand along the way. I was like, okay, I'm gonna get, price is most definitely gonna get to here. Okay, so I thought we still have the potential for the model 1 to go over in the model 2. Mind you, your trade should have been de-risked already. I just got front ran by the market makers. Okay, the one time I posted an exact target of 359, they front ran it going to like 359.1. Like my TP was at 359, but then on MEXC, so it's like nice. So your trade should have been de-risked. Mine wasn't, and then we got that retest and we actually broke structure. Now the return to zone is out of the picture, and typically you want a great return to zone in order to enter the trade. So I didn't enter anything new on the break of structure that we got after coming into that point on the lower time frame right here. So I enter. Typically, you can enter on that first break of structure that you see, and then put the stop loss above the high, target the low. I didn't re-enter because I was already in the trade. So at that point in time, I trailed my stop loss from that high to this high, only risking a bit less than 0.5%. Okay, so the trade was partially de-risked, and then the moment I saw that we V-shaped up, I was like, yeah, this is getting stopped out, and then I got stopped out on that position for a bit less eventually than 0.5 because the entry was literally here and the stop loss was there, so it was almost very, very close to entry. But took that L, and then we pushed up higher. Now the thing is, on the 4-hour, right, on the 4-hour from this initial range, this can still be, this tab disappears on the 4 because you don't have a valid pullback. So then I was initially looking at a model 1 distribution right here, where we have the 1, we have the 2, we have the 3. The problem is that the return to zone just wasn't there. Okay, the return to zone wasn't there for me to just enter. Like, I'm not gonna enter a model just because it has a great risk to reward because you have a potential PO3. Like, I still want my high probability model to just enter on, and we had this demand zone. So don't get blinded by the potential risk to reward of a setup. Like, if the setup isn't good, you shouldn't be taking it. Not because, oh my god, it has a potential of a 1 to 15, I'm still gonna try it. No, that's a great way that most traders get wrecked, because they see the potential and they change their perspective from, is this a high probability model, to, oh my god, if I win, I make $1,500 or $15,000 depending on your risk, and they get blinded by the fact that their setup is not even good. So I saw this demand right here, and then we got the breakup structure right here. So I entered, but not full size. Okay, I entered around 0.5, and I kind of wanted to see what was going to happen once we came into that demand zone. And then I discussed this live on stream, that price came into your demand, and you had two demand zones. You had this big demand zone, and you had this smaller demand zone. So we bounced off the refined one. We came back up, swept all this liquidity, from that move up right there, and the move down, and then broke structure back to bearish. So right here, I was like, okay, technically speaking, price shouldn't come above this point, which is literally our entry. And then what happened is that we wicked the low over and over again, coming into support. And it's very simple, guys. It's like soccer. If you can't score in one goal, you're going to score in the other. If you can't break the low, you're going to take the high. Okay? That's simply the name of the game. You don't have to make it more complicated than that. So the moment you see an aggressive expansion here on the lower time frame starting to arise with this aggressive push up after sweeping the low like once, twice, 3 times, 4 times, you're like, they're sweeping the low, leaving the highs intact right here. So, you're going to squeeze back up. So that short position got stopped at break even. Yeah, that short position got stopped at break even. And then we pushed up, but I zoomed out, and shout out to, I forgot the name of the person that gave this kind of like double breaker block that was still located right there. Mind you, it wasn't only a breaker, you also SFP'd your market structure high from the top down right here, right? So you had lower highs and lower lows, and you SFP'd that. Well, you guys know, SFP the market structure high, break structure back to bearish, you can have a full rotation down towards the market structure low. That's just market structure lecture 1 of the mentorship, right? Very basic. So it was still a potential area to reject. And then I zoomed out again on the 4 hour, and I'm like, well, on the 4, this can still be a valid model. And that's what I told you guys in yesterday's evening live stream, because you can see it was right around, we go live around like 7, and that's around when this pullback already happened. So we told you it's still valid. It's still valid. You just need a confirmation. So right here, we put in that third tap, which is your new third tap, which is basically your low time frame schematic going over in a high time frame schematic. It's explained to you in lecture 6, going over advanced TCT models, because it was a bit more of an advanced setup, but definitely you can still take it. And then my exact entry was actually on the redistribution of the back test. So we came back into the mat right here, right? Came back into the mat right there. And then we actually retested that initial range high on the left. And then on that retest, we had a redistribution. So on the low time frame, you can see right here, you have a 1. Let's make it blue so you guys can see it's different. You have a 1, you have a 2, you have a 3. So I'm like, and then you broke structure back to bearish. So I'm like, okay, if it gotta go, it gotta go right now. So boom. There was no structure in this upwards leg, unfortunately. So short on the breakup structure, stop above the high. Bro, luckily I was asleep during this time, because that was a bit, that would have caused me to stress a bit about the position. But yeah, that was the setup, and then the target is pretty simple, right? The target is the PO3 target, which is this low right here, netting you over 23%, or basically a 23x on your risk on the setup, and you're basically entering on the same model 1 and the model 1 right there. But then, we came down very slow. We came down. Oh, yeah. Well, now it's obviously very fast. But initially, we came down very slow. And I literally said on the private live streams during New York Open side of the trading community, I was like, if you're coming down to the range low this slow and you don't get the pop down, this is gonna reverse back up after taking the range low. So I was like, you need the pop. I literally said, you need the pop to confirm it. And then we got the pop. So like it was very like this pop confirmed everything. Because I also said like 20 times, this demand zone right here, this is not demand that's gonna hold price up. This demand is solely placed there for your so-called market structure experts to be calling for a higher low for the higher high following this upward structure from the low up when they don't understand ranges. It was the exact same during the PO3 that we traded on Bitcoin back in August. It was the exact same. And I even said this specifically in the mentorship, literally in the mentorship. I don't know where I said it, to be honest, but I just remember me saying that in the mentorship that if the demand is located right there, it's even nicer. Like it's genuinely even nicer because it's just there to trap people. Oh, here, you can see it. I gave it to you exactly how I trade this. I gave it to you on my YouTube. Like it's really funny. They gave you a textbook schematic. This is for a bullish PO3. This supply zone is where a lot of retail gets trapped, expecting a lower high following the overall downtrend. Well, just vice versa it for fucking bearish expansion and the bearish PO3, and you have demand, right? But the same thing applies. So the people that paid attention, the people that are inside the server, they're winning. Okay, that's all I'm saying. They're winning. So we absolutely sliced through that demand zone, and yeah, like the target is the range low right here. It's that simple. The target is the range low, but you don't recover, like you don't V-shape recover from a PO3. It doesn't work like that. Like for a great comparison, you can look at Bitcoin, right? Like you don't recover from a PO3 in just a V-shape. Now maybe a V-shape on the high time frame, but people underestimate the high time frame. That takes days, sometimes weeks. So right here on Bitcoin, this is the PO3 I have been referring to. We had the exact same right here. We also had that PO3. So this was your manipulation above, met all the requirements, and then you had the expansion towards the downside after ranging for a minute. And then this was your range. So here's a great example of what I want to see for a bullish continuation, right? On Bitcoin, we were looking for a potential third tap from a high time frame accumulation standpoint. We had that extreme liquidity target right here. So I literally said back then, I want a V-shaped recovery, sweeping that and then going back up, where the purpose of the PO3 was to confirm the third tap of a high time frame accumulation. So it's also very nice that during Bitcoin, we had the initial expansion towards the downside, and then we came down very slow. Like that adds to that bullish idea. So if that happens on ETH, that's even better. But as of now, we're coming down very aggressively, right? But let's say we come back up right here, and then we reject for lower, and that lower rejection is gonna go slow, right? Slow. Then I'll be looking at this entire piece of price action as my bigger range to then look for a high time frame reaccumulation model. Okay, I'm gonna look for a high time frame 1, high time frame 2, and then maybe even come back down for a high time frame model 1. And this baby you're gonna take to new all-time highs. This baby you're gonna take into price discovery, because that will be of great size and of great magnitude, and that can have a lot of follow through. And I'm already telling you right now, right? This is not going to be some sort of 1, 2, 3. Okay. I know just people are going to ask that, and I'm going to repeat that in the future. But if your second tap is a PO3, then typically the third tap from a Model 2 standpoint doesn't do anything. Sometimes a Model 1 works, but overall, not that much. So for a high time frame setup on ETH, I would just love to sweep that liquidity, right? But as I said yesterday, ETH sometimes leave equal lows behind. So maybe we just get them all. Maybe we leave this liquidity behind, and just only take take this low right there. And maybe we even turn it, maybe we don't even sweep the main low, but we sweep the range low, right? And then we already reverse back up. But it's just very funny to see that almost all pairs that didn't come up with all pairs that didn't come up leaving a proper accumulation, people are like just like they're just happy that it went up when they need to be cautious, right? They need to be cautious. Like I remember this very vividly. Wyckoff Insider posted this PO3 and said, imagine. And I said, just imagine. And I think my comment underneath your post got like 15 comments saying, oh yeah, and imagining is the only thing you'll be doing. Yeah, fuck you. Respectfully, fuck you. Like you're here holding your ETH beta back that's now down 20% while we are making 20% in a single trade, adding back lower to your ETH beta when you're hoping to just get back to break even. Okay? So it's like we're 7 days into 2025 and people have alerts on to hate on your fucking correct post. Literally, a correct post. And even if it didn't work, it was still a correct post because it was a potential scenario. What can people not accept about mapping out different scenarios and acting accordingly, you know? But not everybody wants to be traders, right? So as of now, we're at local support. Loki, this is the only support. It's a crazy inefficiency level. I was expecting a bounce here. We're currently getting the bounce. Crazy imbalancy level backed by demand. So, you know, overall, I'm expecting a bounce here, but it's going to be a dead cat bounce. And what that means is you're going to bounce just because you just had such an aggressive sell-off. Price always gives a relief bounce. And I'm going to look for shorts on that relief bounce to get some sort of redistribution, take it down more. Oftentimes, you get one crazy extra opportunity to short prior to the target getting hit. And from there, I'll look for high time frame longs. And even in some magical way, we V-shape recover from here. It doesn't matter because profits, TP1s have been taken right here and TP2s have been taken right there. And the stop loss has been trilled into profit. So it's a win-win, you know? It's a win-win. Every long, you can now find low time frame accumulation longs, and you're just hedged against the market. You're schlong, like we like to call it, you know? But overall, the opportunities today have just been nuts. Also called this short on H-bar during the stream. That's also a nasty profits. Like, we're generally 7 days into 2025, and I'm telling you, the fact that TCT has been this effective is just your sign. I'm gonna say it one more time. Like, if you're watching these live streams on a consistent basis, but you're just not trying TCT models, is like, why? Because sometimes people also ask me, like, I'm very busy with work. You may be busy with work, you know, and you cannot trade full time because you have a job, which is completely normal. But what you need to do is you just need to put extra bit of hour that you have free into studying the models, because trading is a one-time learned type of skill. You only have to know it one time and you'll never unlearn it. So in the beginning, it just takes some extra grinds and some extra effort that even in your hours besides your 9 to 5, you have to put in the hours into trading. But eventually, right, you're going to understand these models. You can take one setup, you can net over 5% and be done for the week. And then that's going to develop to a point where you can now quit your job and now you're chilling, right? But there's just this point in time where you just need a bit of extra effort. I don't care how hard your job is, you will always have a bit of time on your hands that you just need to allocate to this shit, okay? Because I always say, it just takes 5,000 to 10,000 hours. It takes 10,000 hours to absolutely become an elite trader, but I don't even have 10,000 hours in the market, and I'm already very, very, very profitable. So I think I'm like 5 to 8 hours in, you know? So I would say from the 5,000 hours point, you can already be profitable. And my 5,000 hours started with trading divergences, bro. Not even understanding market structure. You are starting with already the correct mentorship to watch. So you can literally divide the time you need in 4. And then especially if you're in the Discord with personal attention from me and Wyckoff Insider, it's like it just accelerates your process so much faster, right? But I get this question quite a lot of like, what should I do? Because, you know, I'm an athlete, or I have work outside of trading and I can't spend all the time behind the charts. Bro, study, study, study with the time that you have on your hands and the time that you have left. And eventually, once you develop the skill, trading requires no time. I don't spend that much time trading. I spend all the time in the Discord teaching, and then I go live for 2 hours during New York, and we take a setup either prior, during, or after, and then you wait. That's it. You wait for the setup. You can easily do your TA. I do my TA in 30 minutes max. Max. You know? So it's like in the morning, do some TA, and then you're done. Set alerts, and then act accordingly. And you're literally trading is freedom, right? So that was my yap.
Yeah, people need to study.
It's yeah, that's just it, bro. It's like it takes just a bit of time in the beginning, and then like you what would you rather want to do? You know, spend the rest of your life doing that same job, or eventually, you know, maybe this shit takes 4 years, bro. You can live to a fucking 100. You can live to 80 minimum. I bet most of you guys aren't 40 that are watching. You know, you're not even half of your life. Like, you can then have fucking 40 plus years of just freedom. You know, I have a lot of young guys in the server as well. It's like a uni degree takes fucking 4 years. Add a master to it, and you're like 6 years down the road and fucking 100K in student loans. This shit you can literally do for free. Just treat it as a study. Make some exams for yourself that, okay, Saturday I need to practice, you know? So it's like, just treat it as if it's a requirement, you know? There's no option. It's not like, oh, I can study. No, you need to study. A lot of people can only work when they have actually an external factor pushing them and you know, driving them to do so, because they can't get the discipline themselves. But guess what? On the other end of creating that discipline, knowing that you don't have to get out of bed and nobody will know if you do, but still do it, that's what's going to differentiate you from like all the other people. Because most people only get out of bed because they either have to go somewhere, you know? If they didn't, they would just sleep till they wake up. The fact that you maybe don't have to go somewhere because you're full fucking grinding into trading and you still wake up in the morning at exactly the same time as you're supposed to, bro, that's what's going to create that discipline. It's so much harder. I always thought I was a disciplined person, but I realized I just had to do those things. I had to go to school in the morning, so I had to get up. I had to go to soccer practice, so I had to go, you know, otherwise my parents would see me at home. I had to go to kickboxing training, you know, and train a total of fucking 7 times a week. I had to go to my soccer match because they expect me to come and I have to go. So when I actually went on live on my own and moved out, and then I quit uni to fully grind this, I was like, fuck, now it's just me, you know? Now I don't have to go to a lecture. Now I don't have to be anywhere. But then they're still behind the PC with Mr. Wyckoff Insider every fucking day, right? At the exact same time, in the exact same calls, losing money for multiple years. Getting woken up in the middle of the night to take a trade, to lose, to then wake up and do the same shit over again, you know? And still showing up the exact same time, the exact day after, you know? So it's like, how bad do you want it? If you actually want to do this shit, you'll find fucking time. I don't care what you'll do, you know? You maybe are going to live even cheaper than you already are to, you know, be able to take one more day off the trading, to just allocate 12 hours to that. I don't want to hear no excuse, okay? I don't want to hear no fucking excuse. You can make
What
this
if I
shit
have
work.
a girlfriend?
What if I have a girlfriend? I also have... Guess what? I also have a girlfriend. I took her to Cologne for the Christmas markets and then to Paris for New Year. So trust me, she's going to be very happy with you once you make this shit work. You're gonna say, baby, you're gonna look her in the eyes. You're gonna say, baby, I'm gonna become the greatest trader ever, and I'm gonna be maybe busier for 2 to 3 years, but you're gonna love my ambition, and I'm gonna take care of you the rest of your life after. Trust me. She'll treat you like a true man. But does this model work during Asia? It's like, why is that important? It works just always. But Asia in general just has less setups because Asia has less volatility typically, especially in Forex. But no matter your time zone, you can trade more than just Asia, right? Because Asia, if you're in Asia time zones, will probably be in the morning somewhere, you know? So then you can trade London after, and London can be your main trading session. Like, and otherwise New York, like sometimes New York. Everybody has either London or New York.
What?
I just read Finn's comment. You don't have to tell her what you're doing. I never say what I'm doing. I'm just saying, baby, I'm making money. That's like that's it. Yeah. Like, don't worry, I'm making money, you know? So get to work. Get to work, guys. I know if you want to whip up some charts, brother. I've been yapping for a minute.
We can go over the Bitcoin chart.
Yeah, what do you think is going to happen next on Bitcoin? Because Bitcoin in general,
I want to
right?
go lower. I would love it.
So in general, Bitcoin completed the accumulation, but then it wasn't particularly showcasing that we had to dump this hard. It was more ETH.
Yeah, it's like people are just buying the dip too happy and they are too confident. So you want that to switch and you want them to actually sell, and then I think you get a low.
So give me some scenarios.
Can I grab
that you're
the
thinking
chart?
of?
So yeah, I have this demand
I know.
zone
Wait,
on my chart.
I'm sorry to interrupt, but I know you like that eclipse on your chart. That looks sick, no?
Yeah, I stole it from you.
Yeah, I know, and I stole it from someone else, so I don't care. I just
That's
saw it, and I
crazy.
was like, someone was mentioning a 3 drive, and I saw the eclipse, and I was like, that looks pretty sick, you know? Especially if you have like models within models, instead of having all the dots, you use like the eclipse for like the highest time frame one. That's what I do. I use it for the highest time frame one, and then locally you can put some dots in there. But continue.
Yeah, it's super clean. I was searching for it for a long time. It's here, guys, for you if you want to know. So yeah, on Bitcoin, we had the Wyckoff model 2 accumulation. We hit the target, and we got outside of the range, coming into supply. And yeah, when you have such price action and you're coming into supply and people are getting overly bullish, then you need to be careful. Like alt season, Q1 pumps, everyone is hyped. And yeah, we created just a simple local range. You are uptrending, initial range high, initial range low, deviation 1. There was no valid entry in this range. But yeah, there was enough bullishness by the people to view this type of price action. And right now we are breaking structure from the bottom up. So that could confirm a lower price action. I'm watching this 4-hour demand zone for a potential bounce. I have this range low and then this liquidity level. But yeah, you can have some relief up. What you're thinking about Bitcoin?
It's like everything that we apply to ETH from a psychology standpoint, how it's the perfect setup, you can apply obviously to Bitcoin as well. It's just that I wouldn't have gotten an entry on the Bitcoin short, but then ETH made up for it, obviously. But like thinking about it, you get that accumulation, right? And then look how beautifully the buy to sell is on that deviation on the range high. Like you have a buy, you have a range, and then you have a sell. It's like boom, boom, boom. And it is from a psychology standpoint, like it's perfection, because then you get a lot of people talking about that's, by the way, guys, this is always when I say that the technical target of the accumulation is the range high. Like Wyckoff targets way higher and talks about the full reversal. I always say it's the range high because after that they can throw another, like a different type of manipulation on you. And I gave out a scenario, going up to lure in more longs to then distribute and dump down. But I gave that scenario back in on that Model 1 distribution, way more on the left, in the inside of the range. That was your range high. Your range high was created by a Model 1 distribution. Yeah,
This
so
one.
right there, I gave the scenario, go up a bit more to lure in some more longs to then reverse back down because of that liquidity that's remaining below. Now, then, I was referring to the move up that we're currently having. I wanted a move up higher, but we already distributed the price there and dumped it lower. So I was like, is that idea potentially then done? But it's looking like, after seeing this aggressive buy to sell, that maybe my idea that I had at that point in time is right now coming to fruition. Go up, lure in some more long. Go up, lure in some more longs, and then reverse price back down, especially because the distribution on the Model 1 was prior to coming into 2025. And 2025 is like, you have the Q1, like you said, with the bullish news. You have January with the bullish news. You have just new year, new me type of price action. So it's like, it is the perfect trap. Open up the year, go up, lure in some more longs, reverse back down, grab all the liquidity, reaccumulate, and go higher. So personally, I'm thinking we could get a bounce on your demand, but like, does that look like a level that we put in just like a low, especially the way that we're coming into the level as we speak? Like, does that look like a high time frame pivot point area? Not
Yeah, and also
not
like the yearly low, the Q1 low is right under it.
Oh,
And would be
I never even thought of that. That's a great catch. Yeah, bro, we're gonna take out the yearly lowdown for sure.
yeah, some extra
For sure.
manipulation.
Yeah, that would be perfect. No, imagine just going down, surpassing that yearly low, and then sweep. I personally think, I explained this yesterday. I'm like, we either front run the range low or we take the liquidity at 85.2. That was always my idea. So I would love to just go down there and then just have a nice ass reaccumulation. Maybe even confirm weekly market structure. Can you check what the weekly is doing? Does it have a potential of like a 2 consecutive bearish closing candles, or is that still early? Yeah, so that would need some more time, because this would be the first candle after those first other two. But the other two was an inside bar candle, so it doesn't count. So maybe even go down for 2 weeks, close this week bearish, go down the second week, and then just reaccumulate, go higher. I would love that. That would also look so clean. And then potentially that is already some sort of the start of like a high, like either you break structure or you start a high time frame range. And can you go on the monthly? Can you go on the monthly for me just to check?
Oh,
Like, that's what I'm saying.
but this is not good, guys.
That's what I'm saying. That's a pretty decent high, but like we're in the beginning of the month, so maybe even go down, maybe go down faster, reaccumulate, and still close the month decently. Can you draw that from a timing standpoint? Can you go on the lower time frame, put 1 Feb on the chart, and see how much needs to happen, and how fast? Damn, that's pretty
Hmm.
close.
Yeah, this
So if
I
you go
think
down right now,
this high is gonna close like this.
if you go down, can you draw going down? Yeah, going down, kind of like just like use some zigzags,
Mm-mm.
just to get like a picture of like how fast things need to happen, and then like reaccumulate from there. It's
Yeah, this
where
is not. I think it needs to
where's the
be bigger.
music?
So triple lows, you know the vibes.
Just man just puts triple O's in the chart. Yeah, it's but then the thing is that the candle would still close bearish. You know what I mean?
Yeah, but like I think people will sell so hard into these lows. So if you get this, it will be so quick.
Yeah, and especially because people are not going to be watching that level. They watch for like a high time frame back test of the range, you know? Like of the macro of the previous macro range. They're going to look for that because that's the most obvious level. Can you pull a 0.5 fib from low to high? Like from the macro range low to the current all-time high? I just want to see where that is. And then put on the 382 because that shows actually bullish continuation. Oh, that would be
Hmm.
nice. That'd be nice. Kind of deviate at 382. If you can hold a 382 in the uptrend, that's bullish, you know? So I would love that 382 to hold, which is nothing but a bullish retest. Sweep that sell side liquidity. It's kind of liquidity confluence with with the 382. And then bounce, right? That'll be perfect. Obviously, the golden pocket is like perfectly aligned with the back test of the high time frame range where you have high time frame demand getting overlapped with that demand, you know? So like that's too obvious. Price is not gonna do that. That's too easy. So a bullish
Ye-
continuation, bouncing off that 382, sweeping that sell side liquidity, that's for me the low.
But do you have a scenario where we go to this level?
No. I don't
It's
I
too low.
no. No, that's too aggressive, bro. That's too aggressive. Just look on the left. Look on the left in the previous bull market. You know? Like, yeah, that was it. So it's like, and what would that move be from all time high to the 382 at the moment? From the all time high towards that liquidity level? How much what percentage is that?
20, 21.
21.
Can you do? Now, I
21.
think that's good.
That's that 21%. That's decent, no?
How much was this one? This
Probably like
first higher time
30.
frame pullback.
How
Hmm.
much is it?
30, 31.
Yeah. So, but like it's 31 at a different price point, right? We're way bigger in size.
That's true.
So going from 30% pullbacks to 20% pullbacks, you know, as the bull run and as cycles move on, it's that's very common. So yeah, I would just love that idea because I'm personally struggling to see price just reverse after this buy to sell. How can it just reverse from here? It was
Right
such an
now.
aggressive, yeah, like how can it just reverse back up? You know what I mean? Like as you said, you're breaking structure back inside. So expectational order flow is a lower high for a lower low. You know, so like we're going to watch multiple levels of structure obviously from the low up as well to confirm that lower high, and if that doesn't happen we do end up reversing, but I'm just not seeing it, you know? I'm not seeing it just reverse all of a sudden after that aggressive buy to sell breaking structure. That just doesn't happen. That only happens if you're in the high time frame uptrend and then you break structure coming into demand and you have a fake break, but that's not the case here. So because you're not in the high time frame uptrend within the range, it's just like rangy price action. You have that distribution at the highs. You came for supply. I think that's even like a golden pocket for the FIB guys from high to low, from the range high to the accumulation low. I think that's even a golden pocket. Yeah,
Yeah.
kind of around that golden pocket. So I'm just not seeing it reverse from here randomly. That would just be, in my opinion, a bit hoping, like because like nothing is showing signals that it should reverse. The yearly open is there right below that demand. Maybe we get a tiny bounce, but I do expect that yearly open to get taken out, and then not create the yearly low. maybe even create the yearly low. You know, nah,
That would be crazy.
nah, probably create the yearly low for a while. You know, until like bear market gets confirmed, and that's not going to be in 2026. That's going to be earlier, I think. So
Yeah, I'm so interested how bearish people will get if you become to this low.
yeah,
Oh, oh.
I think it's perfect, bro. I think it's perfect.
Then
I
you
just
also
know
get like on Andy,
yeah, on Andy
this
you'll get my
BYSO.
levels. Oh my lord! If I get that level, I posted that weeks in advance prior to even having a high time frame distribution. If I get that level, bro, it's it's a victory lap. You have to pull it from the current range, like yeah, from there. And then you have a breaker backing it up there. My zone is a bit higher. I have that
Right here.
breaker.
Like
Yeah,
this.
so your high time frame demand starts there, but then you also have a breaker backing it up. I think it was on the daily time frame, if I'm not mistaken.
Oh yeah.
Yeah, and then it's also right below where that liquidity. Um, why do you have your why do you have your volume area high and low? Just so I always have like the dotted. Otherwise, it's just so aggressive on the chart. But that's personal preference. check if you like it more. I'm curious.
Let me
Put
see.
those settings to dotted lines.
Where the
No,
fuck do you
just
do that?
style, and then the black line. You're clicking on the color. You're clicking on the line next to it. Click on the line next to the color. There you go. Oh,
Do you have this
oh yeah,
one?
it's the same. It's the
Or
same.
this
Yeah,
one?
I have the dots, not the stripes. The dots. Try it.
It's clean. It's clean.
I like it. No, it's like
It's
on the
better. It's
background
better.
now. It's like on the background a bit. Like the candles stand out more.
I
But yeah,
have to
overall,
admit.
you have the volume there. You have the breaker there. You have the start of your high time frame demand there. A lot of confluences in that area. So
There is an exchange where you can long good size, I think.
which one?
Yeah, Maxi it's not. But I saw 100 XGK. He had an exchange where you can long more.
Oh,
So I'll check that out.
yeah. Let me not open up a big fat leverage long, bro. If I see confirmations, guys, obviously, always confirmations. I literally said, in hindsight, it will look obvious. You know,
This
but the
one.
people, yeah,
Bitcoin.
but you need to see the vision. Like in general, right? Like in general, when when you show me any random chart, okay? When you show me any random chart and I were to tell you, okay, we just swept the macro range high. So delete delete, yeah, I'm talking about that high. Yeah. Yeah. Okay, so if I were to tell you, okay, no matter the chart, if I told you we just completed a high time frame PO3 on ETH, you know? Exactly. We came to the range high, we deviated it, and we broke structure from the low up back to bearish.
This one.
Yeah, so delete that range. Yeah, if I told you we just swept the target of the PO3 and we had a deviation and we broke structure back to bearish, what would you say is expectational order flow? Lower high for lower low, exactly. Then when I tell you, because sometimes you do get those fake breaks to mitigate demand to go higher, right? But it all depends on how price action develops after it put in low. But then when you have a potential PO3 that's this perfect, it's just the reason why it's so perfect is because it's a perfect range that was compressing on both sides. And then you form a perfect range above the alt range. The manipulation range is a perfect range. Yeah, yeah, it's hard. It was a bit hard to draw, but that's exactly what I was talking about. Like, yeah, you can, yeah, yeah, yeah. You have to the yeah, It's- yeah, and then
So it
yeah,
was
there you go.
curving weird.
Yeah, yeah, yeah. There you go. So you see price compressing in it. Like if you just watch the lecture, you'll see it meets all the requirements. Generally expectational order flow, lower high, lower low. You see the range is compressing. We aggressively break out. We form a perfect range outside of the old range for the manipulation to take place. It was a bit of a sketchier Model 1, but it ended up being a Model 1. You can be wrong 3 times and then nail a 15 RR move. So you can lose 3% and then make 15%. So that's I'll take that exchange any fucking day, right? So it's like it was just perfection. And then what I even like the most is that people then talk about 3 drive patterns being a fake pattern to trap retail into thinking that we're gonna have a PO3, making comparisons to the bear market low, which is just a different case. On ETH in the bear market, you also had a potential PO3, but then that didn't play out. Yeah, yeah, you can see it right there. So your deviation is the second tab. Yeah, yeah,
This?
and then yeah, that was your range. If you extend your range high to the deviation high to like the yeah to that, and then extend it to the right, you can see a model 2 distribution there that already deviated the low and then you went higher right there. Yeah,
This one?
yeah, yeah. So that was the manipulation above the range. So people were making comparisons to that, but like it's so different. It's so different. But either way, right? Either way, that distribution hit its target. That's what I always say. You win with the PO3 play because the distribution, that's why I'm saying you have to enter only if it's a high probability model in the manipulation phase, right? Otherwise, you simply don't enter because you shouldn't get blinded by the potential of the RR of the trade because then you're not focused on the trade, you're focused on the money aspect of the trade. So right here, you had a good distribution, but then you confirm the PO3, you enter on the PO3 in the manipulation phase on the distribution, but you confirm the distribution if you get that pop back inside. Well, did you get the pop back inside? No, you know? So instead of people saying, oh yeah, but this time it failed, so I'm not even going to try it the other one, first of all, the timing and the area on the chart is completely different. Secondly, if you enter on the manipulation phase, you should be de-risked by the time you hit the target of the distribution. So it doesn't matter. It doesn't matter. You're then in a risk-free trade, you know? So it's just not valid. You're comparing a macro model to a high time frame model in different locations on the chart, different timing as well, because that was, when Bitcoin did confirm an accumulation, and did fucking confirm that PO3 and did break out. So it's just different. It's different.
Damn.
You cannot tell me this is not clean, bro.
It's super
Like
clean.
the paw back inside as well. It's just perfection.
Why
Like
do
you
we think
pop
that?
out, like you pop out and you pop back in. Like you pop out and you pop back in. I always say, as fast as you can come up, as fast as you can come down. You know, it's
Crazy.
so pretty.
Oh. Let's see what the sentiment will do when we hit this. Oh.
Yeah, bro. It's gonna be bad. It's gonna be bad. It's just, can you zoom out maybe on the higher time frame to just see if like the current PO3 is just like one move up on the higher time frame to kind of validate, like, to go over in like a high time frame range that I was laying out. Yeah, I would say that as well. Because I'm thinking like maybe there's like on the higher time frame it looks like one move up, from the low to the high.
Hmm.
So
What do you
like
mean?
your range low would be the low at the demand zone, and the range high would be the high of the PO3, and that would be your starting points.
Oh,
Like
this.
that, yeah. But like, can you validate that on like a higher time frame, or like the 3 day maybe? What is it? A 3 day? Yeah, on 3 day that's the case.
Yeah.
That's the case on the 3 day because you also don't have like structure. It's just move up. So it's kind of like a 3 day range. So I want this range to eventually go over in an accumulation. That would be my ultimate play, to be honest.
Maybe PO3. Already, it cannot happen.
What do you mean
Then you need
PO3?
like a manipulation phase below this.
And bro, imagine. But then you'll need to come down very slow, preferably, you know? So the range is not really
Yeah.
meeting the I've never seen a PO3 go over. That would be pretty fucking nuts, though. PO3 going over into another PO3. Give me a break.
I think we don't need that manipulation.
Yeah, that would be pretty insane. That would be pretty insane. But overall, I'm hoping and I'm wanting for this accumulation to go over in a because to go over in the for this range to go over into an accumulation because high time frame structure from the low up inside of the range hasn't been broken. Like you bounce with the demand. That demand was your 3 day low, or 2 day low, depending. No, can you go on the 3 day? Was it 3 day? Was it
No.
daily? Was it daily? No, because that was more above already. That's a bit awkward. That's a bit of an awkward spot then, because like I personally don't use 2 day for market structure pools, just day, 3 day, 5 day. So it's kind of in between. To be honest, ETH has just also been a shit chart. Like just for the TA, like the bear market low was shit to call. The like when you think about it, like actually think about it, okay? We had a bear market low that looked like a PO3, but canceled last minute, but that can still cause you to be on the wrong side of the market for a long time, right? And then you pushed back up ever so slightly to immediately go over into another macro PO3 that also never took the low. That's what you have been doing this entire bull market when Bitcoin has gone from 16K to 100, you know? Like, that's it. That's all it has done. Something that looked like the bearish PO3, but canceled last minute, that went over into another PO3. That was also shit to trade. So I'm like, God damn, bro.
Maybe finally we get the accumulation.
Bro, I hope it. But the thing is, right? A lot will need to happen for that range to turn into a high probability model based off the fact that you've created and trying to create supply at the top and are coming down extremely fast. You know? Like, that's a nasty order block. That's all I'm saying. It's still not confirmed. It needs like 4 more days. When does this candle close? In hours?
1 day and 3 hours.
Oh yeah, so it needs 3 days and 3 hours to confirm, because you need 3 candles. So it's a lot would need to happen. That's all it is. A lot would need to happen. But overall, a man can dream.
We can dream.
A man can just dream, But it has been pretty rough, guys. I'm just not gonna lie, right? Like, even though we're shorting this and we're trading and we're making money trading, I'm not saying I fucking like seeing my spot backs down that much. Just that, we have 3 portfolios that we trade. I have my investment portfolio that I do not touch, and I sell at the end of the cycle and buy at just bear market lows, preferably. I do my best. And then a swing portfolio where we buy low but also actually sell high actively. And then we have our leverage trading portfolio, And I've given the guys in the Discord an entire, cash flow system on how the money should flow. You make money leverage trading, you move it to your investment portfolio when prices are going down to leverage the capital that you're having. Same for the spot portfolio until you reach a certain point in the chart where, certain percentages and ratios, your investment portfolio will very heavily outweigh your swing and leverage accounts combined, because crypto then should be going up by that point, and then you start your scaling out process. Very effective system. Um, and yeah, Brett also got nuked on that. Everything got nuked.
Yeah.
That's
I
that's
want
that's
this.
the benefit I explained. I gave a very in-depth analysis on the in my channel in the Discord about how you should trade Brett from that hedge standpoint. Where on the hedge you barely take any profit. Because the accumulation is the high time frame target. The accumulation is prior, like that's dominant. Like and the purpose of the distribution can simply be to fill more demand to then go higher. So you don't want to be taking profit on the accumulation. Maybe take a TP, TP1 of 10%, just to cover some fees and de-risk the position. But your stop loss can go entry on this entry. But then you take the short and you just de-risk the short, but you keep it open. You keep it open. You de-risk the short position by putting your stop loss to break even or hitting a tiny TP that equals out your stop loss dollar amount. But then you just keep it open in case of something like this. And people don't understand that as traders, we can be wrong. I can be wrong initially so many times regarding my, pre-planned idea, but still make money, still not lose money at minimum. I can be wrong about that Brett high time frame long, but price already moved up like a 10% net gain, like a 10-hour trade, and then you can take 10% TP to cover fees, realize 1%, move stop loss to break even. So that's a guaranteed winning trade. Hedge out the position, that's a winning trade, And then you can be wrong about the high time frame idea, but we don't trade expectations, we trade confirmations. So when the confirmations for shorts get met, we take it, hedge it out. Now you're both de-risked. Win-win, So it doesn't really matter at that point. So as traders, it's crucial to understand that we don't need to be right all the time. We need to be right for a moment in time. And that moment in time is simply the moment where you can de-risk the position. Because then you don't care what the fuck happens because it's a risk-free trade. Like, do you understand how nice it is to have risk-free positions? Like, when you're watching this and you're not really a trader, but more like, I don't know, meme coin flipper, this and that, you're always risking. Because on most pairs, you probably cannot have like an easy to use stop loss, and then you're risking the amount that you're putting up, you know, and then you can go to bed and just get rugged on, you know. I don't know if you have systems. Maybe you have systems that play stop losses. I'm not that experienced in using all those systems. I don't know if there are like ways to place a stop loss on your spot buy. Um,
I think you can if you do it on exchange, but like when you do the
yeah,
meme
but I'm
coins,
talking I'm talking degen mode, soul
oh
trenches.
no, you just get worked.
Like you can set limits, I believe, but I don't know if you can set stop losses on like something. So it's like you can never you're always risking the capital that's allocated to that project. Whereas right now we're trading contracts, So you can just put a stop loss and you're done. You're trading USDT, So that's just something to take into consideration as well. I'm here to slowly reprogram your mind into wanting to become a trader because that's just where the real money is made. Long term traders will outperform, um, especially outperform, like, depending on how big of a catch you have, but on average traders definitely outperform investors. Active traders that can make that 5% a week actively outperform investors, because you have to remind yourself that traders also invest. We also invest. So, but overall, traders actively outperform investors, and then especially the people watching. I think most of you want to make the most return on your investment, so you're allocated into riskier plays that then just sometimes end up not performing. Like if you're in Bitcoin from the lows and stuff like that, and you're talking about 600-700% gains in 2 years, then you're doing a great job. That's you have to actively trade for that shit. But that's also just a moment in time, because then you have to sell. What are you gonna do? 1 year bear market, we're still trading. You know, people say volatility is gone. Well, watch me. I'll still be trading. Last time it was just 1 month of deadness. So, and then you'll have the forex market, heating up again. Although it has been pretty nuts. Normally, forex markets they tend to die off, and also just indices, all of that. It tends to die off coming in the end of the year, based on a lot of external factors of I think contracts also switching for futures traders, this and that, and then that volatility starts to pick back up coming into Jan. So you have the volatility pick back up as Jan goes on, and then it will be absolutely crazy. Typically, forex tends to really be nice in like Feb to like July, even in summer. Feb to July is like crazy, and then maybe you have a tiny break during summer, and then bro, Q3, Q4 is an absolutely nuts until the end of the year again. So that's typically the crazy time zone. So either way, this shit applies to every single market. You can trade this shit everywhere. Even I'm like basically done with backing up all the, or like creating all the statistics and having all the data for the one model for life, which is something I'll be releasing inside the Discord, which is just trading one model in one session in the forex markets, just totally ignoring what crypto is doing, to just give you that freedom. Trade one session. Like, you guys don't understand. Trading crypto is a fucking pain in the ass. Like, you'll get setups randomly throughout the time. Like randomly throughout the day. You have either 10 p.m., you have 2 a.m., you have then 11 a.m. Bro, it's all over the place. Forex is way more structured. So it's like I'm creating a one model for live, where we're trading TCT models with some other factors combined in it, focused on more the forex aspect with sessions as well. And then, bro, that's insane. Like, just trading one model, one session, and be done for the rest of the day. So for the people that maybe have less time, that can be something very beneficial, where you're trading one session, and this is probably going to be based around London. It is based around London. And then I have all the data, so you just need to execute, right? If I take 100 trades, this is the win rate, this is the average trade duration, this is the average risk to reward, all the shit. Okay? So big things are coming. We're not here to take part. Here to take over, bro.
Loading.
Loading, yes, sir.
Oh.
Do you think making 15% weekly actively trading is realistic? Well, it's doable, but 15% is on the higher end, right? It's definitely doable. I don't know why exactly you want to make 15%, but like the current trade setups of today, you could have easily made 15%. You had a Doge trade, absolutely just beauty, absolute beauty. That was already 10%. You had ETH giving you 13%. You had HBAR giving you, at the moment, also, I don't know, like 5%. So that was just today. So it's definitely possible, but consistently every week, 15% is you need to be an advanced trader. But if you're an advanced trader, you can do it for sure.
Can you please?
I feel like this guy is commenting on multiple. He really wants Ponke. Let's do Ponke for him.
So what do we have on Ponke? Higher time frame wise, is this your structure? So you can pull your range from high to low. We deviated the range high, and we had a listing right there. So this is a heavy supply zone. Yeah, you had structure trending down here. So you can pull your range from low to high. I deviated the range high, and we are now coming into demand right here. This thing is demand. And yeah, if you do not hold this, you can go for this liquidity. What do you think about this chart?
Not that good. like not that good. It's that simple. Yeah, you have all the TA that you need on the chart. You have a range, you have a deviation, you have liquidity above, you're at demand below. The current accumulation is not good. It's not a high probability model. So all I'm seeing is if we go up, you can get a potential high time frame distribution, right? That's all that I'm seeing. It's the same with Brett. It's kind of similar to Brett. It's like it's only bullish. Like if you get a high time frame accumulation, you can just long it, right? You can just long it, and then if it breaks out, it breaks out. But overall, from a high time frame perspective, it's like you have a range, you have a deviation at the highs, you can get a distribution. You know, like if you inverse the chart, it would be bullish. But can you
Let's look.
inverse Ponke?
Punk.
Yeah, you know, literally, if you came down and like if you like this would be a bullish chart if you came down, swept that liquidity, and then reaccumulate it. Boom. So let's apply the exact opposite then now, because we're on the inverse charts. Like you have to
But
ask
guys,
yourself.
do not sell. Do not sell here.
Oh, for sure, for sure. Like your time to sell, or at least take out your initial investment, was at a new all-time high, right? That's where the whales took profits, because they created that deviation. But overall, I was going there. I was like, think about it. Like think about it deeper than just looking at a chart. It got listed. I remember it getting listed. And then on the list, you had a sell off. That got recovered. You made a new all-time high. Sell off. It's like those whales didn't want to be in anymore. So then you just need supply getting shifted into better hands of people that are going to diamond hold this. But then you need to see an accumulation, otherwise it's not going to happen. I cannot be bullish, have a range high deviation, and supply left behind, I can see in low time frame accumulation, I can trade that. I can take that into a potential breakout, but you just have to hope for the breakout. And I don't like to hope. I like to be sure about the breakout,
Yeah, this cycle is weird with the listings. Like almost none of them went good.
Bro,
for the
barely any.
pricings.
Like Mudang was the only one that shot up, but then even Mudang also recovered a bit of it. What is Mudang even doing? I haven't looked at that chart in a minute.
What the?
Yeah, so only Mudang got actually proper follow through from it. Yeah. Yeah, you remember
Yeah,
that.
but also, yeah, I entered there. But Mudang also had a listing right here.
Yeah.
Crazy.
And that got recovered, bro. I remember there was this one guy in my message box, and he was like, "Can you give me a soul plate?" And I just said Mudang, like a day before the listing. And he was like, "Holy fuck!" Like some time, I was treating me like a god, bro. That was just pure luck.
How much was this?
Like 100 plus.
Crazy, 120%. But also, this right now is just dying.
Yeah.
Like, what is this?
I have nothing but faith in you, Mr. Rodzer. I'll be an advanced trader. But for now, let's take the 5%. But the thing is, right? The thing is, the more money that you make, the less percentage that you need to make. Because you're trading a percentage on the bigger money amount. You know what I mean? So if you're an advanced trader, you don't need to be making 50% a week. because your account capital will grow into your journey of making that 15% each week. And then you're at the point where, you're trading with 6 to 7 figures, and, like every trade, like a 1 to 1 will equal like 1 to 2K in profit. So then you'll just be, you'll be making 30K profit a week. Absolutely amazing, but like I've noticed myself already that, like, back in the day, I was even focused on like 3 minute ranges, because I needed to get those percentages. I needed to get that account up. And now you'll not. I'll post about it, right? I'll post the setup, but I'm personally not taking this because, like, it's not worth it for me, especially on Mexi, and then sometimes in lower volume places. Like, you can get, bro, on the 1 minute you sometimes even have setups, But I'm just like, with the current risks that I'm taking and the sizes, it's like just getting those decent distributions on like the at least 10-minute ranges, like ETH is a perfect example. H bar today was a good example. That was even on like the 1 hour, that's like my sweet spot right now. So the better you get, the less percentage you need to make. Because people, oh, bro, I hate this. Mr. Wyckoff. People are like, oh, but if you make 5% a week, you would outperform every hedge fund in the world. Yeah, but do I look like a fucking hedge fund? No, dumbass. Am I trading with the same capital and regulations as a hedge fund? Is a hedge fund gonna take a 3 minute scalp setup that's a 1 to 2? Of course not, bro. Of course a hedge fund doesn't make 5% a week trading. The size that they have to move in the markets? They are market makers. You know what I mean? It's like, that comparison is so dumb. If you give me 100 mil, I will not be making 5% a week, bro. I'll wait for high time frame setups that take 30 to 60 days to create themselves, and then make 10% whilst playing out. Make 10% in like a 60 to 100-day period. Taking macro setups, high time frame distributions. It's like, it's all relative to the size that you're trading with. And obviously, fucking, you think a hedge fund will be risking 1% of its account balance in a low time frame entry the way we are doing? Of course not. You think they can risk just 1% on like a setup like that? No, bro. They take way less risk per trade, and are trading with bigger size, so take less trades in general. If you have and it depends on the hedge fund, right? Because you can have hedge funds. Most hedge funds these days are ran by algorithms. But then you have algos that I remember. I have been in close contact with people in Dubai that ran a hedge fund, because I was working on a trading bot, and I potentially wanted to sell it to them. And what they then do is they literally allocate you a certain percentage. Like, you have to give the bot. They're going to test it, see if it works and is aligned within their rule system, because they have rules of like your max drawdown compared to your ROI, to kind of get all those, I think it's like IRR, ERR kind of like measurements, all needs to be in check with their with what they promote. And once you do that, what they'll do is your bot actually gets allocated like 3 to 5% of the total hedge fund's money. Like, what they'll do is they will have like, let's say you have 100 million in the hedge fund, 30% of that will only be allocated to trading bots. Then they'll have another 30% allocated into spot, and they'll have 20% allocated into like different assets, even maybe, like it's a portfolio that they do. And then of that 30%, so of the 30 million that's allocated to trading algorithms, a 3% allocation will be placed on your bot, and then they have like 30 different programs running. So it's like, if my bot makes a 1 to 2 RR, doesn't mean that the hedge fund in general makes 2%. No, if my bot makes 10%, that's 10% of a 3% allocation, of a 30% allocation, compared to the 100 million that they have. So it's very little, because they don't need to have that much risk. The people don't want Like the people want like a percentage gain consistently over time with minimum risk. So why would they go and fucking trade with a 1% risk on the 3 minute scalp entry? They can't, you know? So I don't want everyone to hear that comparison again. Like that just pisses me off. That genuinely pisses me off. Because that's like saying, I don't know what the comparison is, but like that's saying I wish I had a good comparison right now, but I don't. like like I don't know. There's another comparison coming to my mind. If someone can give me a good comparison right now, please let me know. Okay? But comparing it to a hedge fund is like comparing it to a fat person. I don't know. I don't know.
Oh,
I don't know, bro.
oh, oh.
I don't even know why I said that.
The hate on fat persons.
Low-key, if you think about Pepe on the high time frame is not that bad. Like, don't you think?
I don't know, man. They are selling some.
Of course, but like if you zoom out on Pepe, like Pepe didn't have a proper distribution, right? Like it became very close to a proper distribution, but it just missed the POI. You have some sell side liquidity below, but you know, if Pepe takes the range low from here, if you draw a new range from demand bounds low to the current high.
Your chart's on.
Oh. I was like, oh, you have a similar chart to me.
Yeah.
But you know, we never had a proper distribution. You know, it's just like not a high probability model, at least. Like you can maybe argue, hey, this was like a model one. And it could play out. I just wouldn't have traded as a model one. It was just because this demand was like, you know, just not a high probability model, not worth trading compared to other assets. But even if this breaks down, like the most aggressive move has already happened. Like this was the most aggressive. And look what they did on Pepe, just like this move down. That's it. You know? So worst case scenario, I think you just take this low. And we're already coming down, leaving some nice, you know, liquidity above right there. So worst case scenario, because you do got these lows here, you know, I'm like, what's so bad about, you know, potentially coming down and then accumulating here? Now, if you lose this low, there's truly nothing to hold price up in here. This is nothing but liquidity. So then you're talking about these levels, you know? But Pepe still has just high time frame upward structure. Yes, you'll break the daily, but weekly overrules the daily, you know? This is a pretty high time frame level. I don't know which demand I have. Yeah, it's a weekly demand zone with like a 3-day breaker. So I don't think you're going to go lower than that if you even come there based on the current price action. I'm not even expecting to go there. So I'm like, on Pepe, I like Pepe. You know, a lot of buy side liquidity above there. You know, in the near future, this can still come down a bit, but overall, I will be looking for swing longs coming into discount pricing right here, or just, you know, sweeping the main low, creating a higher time from accumulation, which is the preferred scenario, right? It is the preferred scenario, but the fact, like, you have different charts that look different, you know, on this push down. Lots of charts look way more bearish, and this is just a new range. It's not even confirmed, by the way. You need to touch that EQ, but it's gonna touch the EQ, you know. So, but it's like, what's bearish about this? You have a range that wasn't the distribution, but left buy side liquidity above, and then you have a new range. Like your pullback is two ranges, you know. Total percentage push down of 50%. Very typical, very normal, you know. Not that bad. Yeah, I like it. Well, not yet,
As
right? You need to form the distribute or the accumulation, but overall, depending all the craziness that we've had, and you look at this chart and it's literally just one range going into the other range, I'm like, yeah, that's okay. I can get used to that. Two ranges.
It's good for the boys club. That Pep is strong.
Yeah, yeah, indeed. Pepe is like Pepe's trying to just become the new ETH. Make everything Pepe beta because ETH beta is not working. But overall, this is pretty decent. I don't mind. If you can turn this into an accumulation, mwah, chef's kisses.
Yeah, what would you say for total two? How is that looking?
Let me check. Let me check. Yeah, so I had this on total two because it was in line with the PO3 on ETH, where we came down, touched demand. I think total two did come into my demand level. Yeah. Let me zoom out. You never took a new all-time high. Yeah, ETH is just ruining that chart, isn't it? um yeah, so you didn't take an all-time high on the total two. That's pretty interesting. So you didn't make an all-time high on the total two. That is excluding Bitcoin. You did make an all-time high excluding Bitcoin and ETH. What does that say about ETH? Having an
Um,
error right now. Total three made a new all-time high, which is the altcoins, and then total two didn't because it includes ETH. Yeah, so ETH is just dragging this chart down. That's what it is. It's literally ETH. ETH is the reason this didn't make an all-time high. Because total three did, and the only difference between total two and total three is ETH. So ETH is ruining that party over there. But we had a push out, and it's the exact same chart as ETH, right? It just looks like ETH right here locally, and this range with the PO3. So we'll have to see how this develops over time, but high time frame structure, guys, is still up. This structure is still making higher lows and higher highs just like this. So wherever that higher low is going to be, we will see in the future. But expectational order flow is still a higher low. You've got a sneaky little breaker there. You can see the little breaker. But locally it's the same as ETH, to be honest. A bit stronger than ETH because it's also backed by altcoins. And ETH is just a shit show at the moment. But you're at demand right here. But from the top down, it's still lower highs and lower lows, right? It's just a bit useless because, looking at market structure to confirm a high time frame higher low, you have to break structure from top to bottom, which is all the way up here, which is at the high. That's why it's that's kind of useless at the moment. But this could simply be like you can see my FIP there. I had the FIP already there. 705 from this high to this low came in there. And you can just put in a lower high for a lower low. And then maybe from there we tackle that low, and just like I want on ETH, we can start accumulating from there. So we'll have to see. We need some patience. We need some patience. This is also the last live stream until Friday again. So that's why it's important, guys, that you always tune in. Monday, Tuesday, Friday, because Wednesday and Thursday we have private streams in the night inside of the TCT trading community. So public live streams Monday, Tuesday, Friday. So I'm very curious, how we will be talking about price action once it's Friday.
yeah, the charts need some time.
Yeah, especially after this move, it needs some time to settle. But I can already tell you from experience that typically when you have an aggressive dump, you have a relief rally, you cool off, and if the schematic is not completed, you continue. You know, and the schematic is not completed. So don't get too bullish on the relief bounce.
Uh,
No, 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 don't
no.
buy ETH, bro. To be honest, no. There's so many. Like, if the thing is, why would you buy ETH? If ETH is gonna run, ETH beta is gonna run harder. You know, so then just do ETH beta. If ETH looks bullish, I'll bet ETH beta. You know, I'll bet Pepe, Brett, Andy, Wolf. Pretty simple play in my opinion. Okay, guys, we've been going for an hour and 30 minutes. That's our time. I don't know if Mr. Wyckoff Insider has some things to get off his chest.
Not really. We have discussed everything.
Yeah, I think so as well. I think so as well. Damn. This was, by the way, the distribution I was talking about on Doge. This could have netted you already, like, everything you needed to net. Tom W. Shout out to you, bro. Tom W. was the guy that called the breaker on ETH. If I'm assuming your YouTube username is the same as your Discord username. So shout out to Tom W for pointing out that double breaker. And I appreciate everyone for tuning in. Hopefully we can just give an unbiased opinion on the market, you know, truly a market view of traders and not just, you know, crypto investors that want prices to go up. Okay. And that way just educate you on what you can expect going forward based off an unbiased TA. Okay. So hopefully you guys learned something. If not, then definitely watch yesterday's stream as well. I also highlighted a time slot on my channel, minute 7 to minute 27, where I just went and I took 20 minutes of the time of the stream to go over all the price action that you could have traded, showing you the different TZT models. So definitely check out yesterday's stream. A lot of it was discussed in there as well. Basically, today's stream was like backing up what we said yesterday was potentially going to happen, and it happened today. So it's kind of like pre-planning and then showing you what actually happened. So I appreciate everyone for tuning in. And Wyckoff Insider will end it with a quote, putting you on the spot right now.
The magic you are looking for is in the work you are avoiding. Ciao.
Study.